Gold prices fell to a one-week low on Monday, and silver hit two-week lows as geopolitical tensions eased between Israel and Iran, despite an overnight attack on U.S. forces in the Middle East, while betting on U.S. interest rates forecast that the Federal Reserve will cut by only 1/3 of 1 percentage point in 2024, despite Washington's soaring government debt, writes Atsuko Whitehouse at BullionVault. Spot gold prices in U.S. dollar terms dropped as much as 2.2%, hitting $2,333 per troy ounce, down $100 from this month's new all-time high, as news that Iran-backed militia in Iraq fired rockets at a U.S. base in Syria overnight, contrasted with Tehran downplaying Israel's retaliatory drone strike against the Islamic Republic last Friday. Gold priced in the UK pound and the euro also hit one-week lows, dipping through £1,900 and €2,200 respectively. Given the scale of the rally in gold prices since March, a period of price consolidation is hardly surprising, says specialist consultancy Metals Focus in its latest weekly analysis, noting the precious metal remains strong despite prospects for US interest rates to stay higher for longer. Wholesale bullion in the London market has climbed 14% in US dollars since the beginning of March, surging by almost 18% in both pounds and euros. Market consensus for where the US central bank's key interest rate will end 2024 have meantime risen from 4.56% to 4.99% according to the FedWatch tool from derivatives exchange the CME, forecasting a cut of only 0.34 percentage points from today's two-decade high on the effective Fed funds rate. That forecast has now topped the Fed's own 4.60% forecast for more than 3 weeks, as stronger-than-expected U.S. payrolls data has been followed by hotter-than-expected consumer price inflation, plus hawkish comments from Fed Chair Jerome Powell. While some signs of a temporary ceiling on gold above $2,400 have started to emerge, it is increasingly clear that normal reaction functions have been abandoned, says derivatives platform Saxo Bank's commodity strategist Ole Hansen, with gold and recently silver both rallying despite headwinds from normal macro drivers such as the dollar and bond yields. Silver sank more than $1 per ounce on Monday, losing 4.6%, as gold dropped 2.5% and trading at two-week lows against the dollar of $27.35. The dollar index, a measure of the U.S. currency's value versus its major peers on the foreign exchange markets, today edged up to the highest level since last November, while 10-year U.S. Treasury yields, a benchmark rate for government, as well as many finance and commercial borrowing costs, rose towards last Tuesday's 5-month high of 4.67% per annum. In addition to elevated geopolitical tensions, other tail risks abound, all of which have underpinned gold's investment appeal to some institutional investors, says Metals Focus, noting the high and growing government debt burden, raising questions over the long-term sustainability of the world's number one economy's fiscal budget. Broad bipartisan support saw the U.S. House of Representatives on Saturday pass a $95 billion legislative package providing military aid to Ukraine, Israel, and Taiwan after months of Republican Party resistance against renewing America's support for Kyiv against Russia's invasion. Now heading to the Democratic majority Senate, the legislation could pass as soon as Tuesday for signing off by Democrat President Joe Biden. The United States' outstanding national debt grew to $34.5 trillion last week, according to the latest numbers published by the Treasury Department, doubling as a percentage of gross domestic product over the past 20 years to reach 120%. Please like this video and subscribe to our channel.